Hello, this is the tradesight U.S. stock and futures market preview and domestic economic data roadmap for the week beginning 16th of June 2014. That's a Monday ending on Friday the 20th of June. Big story this week, of course, and there's actually a lot of stuff coming out, but the big story this week, or the big item, is going to be triple expiration. That's options, futures, and commodities all expiring. That does tend to mean that Friday will be extremely slow. They'll have everything wrapped up well ahead of that, and usually we'll get our options unraveling move on the Wednesday. Could happen on Tuesday or Thursday, but typically on the Wednesday. And with triple expiration, do expect a pretty decent move as they unravel those options positions. So we'll be looking for those. That usually starts after the first hour of trade on Wednesday or whatever day it actually happens. So let's look at some of the indices. We'll look at what happened this last week. We'll look at the data coming out because there's other stuff besides that, and get you ready for the trading this week. Charts, as usual, brought to you by eSignal 11. Here's a look at the ES futures. This is the daily chart. You can see that we had that 13 sell signal back in April. We sold off a little bit from that, but came right back up. Generally speaking, we've been fairly flat. Not a lot of activity. Volume has been light. We'll look at that in a minute. We did have another 9-bar move up. Got shot higher out of that through that pink risk line a while back when we had the rate adjustment in the UK, and so now we're just finally starting to see some rollover signs from that. Here's a look at the Nasdaq 100. Same exact story. Made a new high, now kind of finally rolling over. Let's take a look at the SOX index. This is the semiconductors. Made a new high for the close here on Friday. This is going to have a sell signal here. It's going to be 11 bars up. Could be within 2 days of getting a sell signal if it just makes new highs again. Here's the NBI, the Biotech Index, which is 9 bars up. As of today, if I go to projection mode, oh, nope, it got erased, so never mind. No 9-bar setup there. This is not at new highs. Let's keep that in mind. Let's take a look at Nasdaq volume, as we like to do, and it's not actually coming up. Interesting. All right, well, for now, it's not bringing up the proper chart of Nasdaq volume, but suffice to say that the volume was only 1.6 billion shares on Friday, so volume has been a little bit light, not nearly what we like to see, and that is unfortunate. All right, let's move now to our intra-week stuff. Let's take a look at what the futures did this week. We're going to look at the ES to begin with. We'll do it. You have to split it up because we rolled the contracts this week. So let's start by taking a look at, these are the, I'm going to turn off the levels for just a moment. This is the M contract. This is the June contract that will expire this next week in 10-minute bars, so you can see the whole week. You can see that we basically lost about 10 points for the week on a little more than that on the ES. Monday we had a flat opening, drifted higher, came back and closed flat. Tuesday we gapped down. It took all day to fill the gap. Wednesday we gapped down, dead flat sideways. A little dip late in the day, got a 13 buy signal there and bounced and closed flat. Thursday was a little more interesting. At least he gapped down and kept going. And actually on the 5-minute chart, the Comer gave us a 13 buy signal. You can't see that here, but actually if I switch to the 5 for just a second so you can see this, really impressive because the 5-minute chart I love to trade off of. 13 buy signal right at the low on Thursday, gave you time for a bounce, and then we've held that as the low of the week. And then Friday was fairly flat, which is not unusual because we rolled to the September contract. And so now all the volume shifts from the June contract, which is the M, to the September contract, which is the U, and those are slightly different prices. It takes a day of trading for the actual technicals to stick and take hold. And one of the things I thought was real interesting was that on Friday, basically the high and low of the session was the exact value area high and low, first day using the new contract. So the market basically settled in and said, yep, there it is. The technicals are now aligned, and we can move forward. So that's that, and here's the new contract. All right, let's go back and look at the Nasdaq side during the week and what it did. A little less interesting, right? Look how flat Monday through Wednesday is, just straight sideways. Then we finally gapped down Thursday, and that was the bigger trading day from an action perspective. Friday opened flat and closed flat. Remember, Nasdaq and S&P left gaps Thursday morning. S&P has a gap even higher Wednesday morning. So it wasn't a very exciting week, but you know this happens a lot when you have the contract roll. It's a quarterly event, and of course this is a little bit more flat early in the week. You expect to get the slowdown Friday for sure, and we certainly did. So at any rate, that's what we saw this week. I'm going to move straight to the economic data that's coming out this week. get you set up for what we're going to be focusing on, and leave it at that. So here's a look at what we can expect. On Monday, we've got Empire Manufacturing Index, net long-term tick flows, capacity utilization and industrial production, and the NAHB Housing Market Index. Tuesday, we've got housing starts and building permits and CPI. That's a big number. It's also the start of a 2-day Fed meeting. So that's going to slow the market down after that first hour or so on Tuesday. Wednesday is the day that typically would be your options unraveling move after the first hour's play. However, with the Fed rate announcement that afternoon, so it may not come Wednesday. We'll have to be on guard for either Wednesday or Thursday. Probably not Tuesday. They'll hold it till after. So we've got the Fed rate announcement at 2 p.m. Eastern time on Wednesday. So Thursday could be the options unraveling move. As I said, we've got initial and continuing jobless claims Thursday. That's the weekly data. Philly Fed leading indicators 30 minutes in, and then natty gas. No data Friday, and again, triple expiration. Everything goes poof, and so you'll see a lot of volume early on Friday. All of it is just being shifted to the stocks to close out positions, and no probable movement. That's it. That's what we'll be looking for. So, Monday could be a little slow because it's always slower. Tuesday could be a little more exciting. There's some stuff going on with the CPI. Wednesday's probably going to be slow, waiting for the Fed, and then maybe something after the Fed if they do anything unusual, which they probably will not. Thursday, we could see probably that's the better trading day of the week with the Fed behind you, but expiration still ahead. And so I would focus on Thursday as the better trading day of the week, but we have a chance on Tuesday. I don't think you're going to get much out of Wednesday. I know you're not going to get much out of Friday. Monday's hit or miss. We'll see what happens. We'll be in the lab calling it, hoping you make money. Have a great week and great Father's Day.